How's it going, everybody? Welcome to a Capital Hungry London trading session stream. It is currently Tuesday morning, well, the morning for me, 1:37 a.m. Eastern, April 20th. We're currently in pre-London market hours. We're going to be doing trade idea analysis on the intraday time frames and as per scalp trade ideas across gold, GJ, Euro USD, USD CAD, GBP USD, US 30, and of course looking at market sentiment, investor behavior, technicals such as market structure and price action, alongside any economic events and micro or macro fundamentals that may be impacting these currency pairs we'll be actively trading. So before we jump into the meat and potatoes, I just want to make sure I can get a good audio and visual check from the private chat in the Zoom, as well as the YouTube audience. I've been uploading a lot of controversial videos on my YouTube channel, so it already got demonetized and I'm getting pretty much shadow banned, but I'll still keep hustling away with some videos until I get fully banned, I guess. All right, everything's good. Let's just go through the nitty and gritty first. If everybody could please read the description of this YouTube stream. I go through a set process as I'm doing this analysis stream. So pretty much I'll start with intraday analysis on gold, then GJ, Euro USD, USD CAD, GBP USD, and US 30. I'll go down the various time frames from like usually to the daily and intraday time frames all the way down to the 1 minute where we will observe price action to execute some potential trades with pre-planned trade ideas. Okay, so don't come in here asking for direct signals or spamming the chat for me to look at a pair as I'm actively talking about a pair or doing analysis. But after I run through that process and I share my viewpoints and trade ideas, and we patiently wait to execute on those trade ideas across these 4, 5, 6 pairs, then feel free to ask questions about technicals and fundamentals. Any questions about the Capital Hungry private service, just go to capitalhungry.com or message me on Telegram. You can see all of my contact information on the screen right in front of you, on the YouTube layout itself, as well as the description on the Capital Hungry website. A lot of people nowadays are not as resourceful as I would like them to be. Common sense nowadays ain't so common, you know what I mean? So it is what it is. You just gotta weather the storm and keep hustling away, but all of the contact information is there. With that being said, make sure you take the time to follow all of the Capital Hungry free resources, which is just for the benefit of your own retail trading pleasure. So here's the Capital Hungry Twitter, where I'll post news updates, even some motivationals or rant webinars that I do, motivational quotes, workouts, food posts nowadays as well, but primarily it's for the headlines. So you get a ton of news headlines here, even Forex Factory sources from our news Twitter as well, and a lot of these other retail websites. Capital Hungry free Telegram analysis channel, and then of course the Capital Hungry YouTube page itself. No clickbait, no MLM, no nonsense or random interviews with marketers, you know what I mean? Just pure information on trading psychology, fundamentals, technicals, scalping all the way to swing trading, and everything in between, you know what I mean? So tons and tons of webinars, contents, all for free, all at your fingertips. You just have to put the time and effort to actually start using it to your advantage. That's a whole different story. That's not up to me. Now, before we jump into the analysis, the YouTube audience, from what I have seen, especially not the YouTube audience now, the people who come at the start of the webinar nowadays, they're the real ones. They understand we have to start planning our trade ideas ahead. We have to be patient, do our prep work, do our analysis, and then wait for our execution points. But you guys will see in about, like, I'm not going to get that many views, but in about an hour and a half, right? You're going to see a lot more people come to the live stream closer to London Open and after London Open. These are what I like to call the market hyenas and vultures. Just horny, heart racing, dopamine, crackhead fiending, come around, scratching around, like looking on every stream. Probably got 5 different streams open, a signal chat open, following some marketer too, watching some marketers live IG in a different tab. Just GJ, gold, euro, and like, you know what I mean? I'm not about that life. We're not hyenas here. We're not vultures. Here, we're trying to be like lions, conserve our energy, hunt when we need to, plan our hunt, and hunt with the pack. Strategic attacks. Right? So that's why I like to always focus on the trading psychology. Understand, this is a game. Jokes aside, understand as manual retail traders, there's always going to be psychology and emotions involved. At the end of the day, it's human nature. The market is built on taking advantage of human weaknesses and efficiencies. That's why 99% lose. So jokes aside, yes, we're going to do analysis. Yes, we're looking to potentially make money. But our primary focus as manual retail traders, not any automated trading here, algorithmic trading, you're entering your own trades as a human being. The psychology and emotional control is always a major key. So we have to keep those dopamine hits to a low, try to stay as emotionally neutral as possible, and just be very critical and logical thinkers, you know? So with that being said, you see the mentor reminder on your screen. I'm gonna flash it a couple times for any hyenas coming in. Stay smart, follow your trading plan, follow your risk management plan, focus on the long-term vision, keep emotions out and stay as emotionally neutral as possible, and avoid crashing your account. Tonight on the docket at 2 a.m. Eastern, we have some United Kingdom jobs data, both the average earning index and the job count change monthly figures. So we're going to be watching that data live release in about 17 minutes. Obviously, we're going to be using that data, watching the impact in real time and seeing if we can use that to a potential, to take a potential scalp trade on GJ and extend it further. Besides that, there's no other economic reports overnight. We do have to watch our reactive headlines. Australian dollars holding pretty well after the Reserve Bank of Australia meeting minutes report, where the Reserve Bank of Australia has already been optimistic. And I was talking about that in the AUD USD breakdown as well. But at 6:45 p.m. Eastern during Asian session hours, we have the New Zealand CPI. And then at 9:30 p.m. Eastern, during after China market open, we have Australia retail sales. Some key fundamental points to focus on across the board. Investors are still very optimistic, okay? Meaning they're still flooding in liquidity and money into the global stock markets, into the risk currencies. What is our basket of risk currencies versus our basket of safe haven currencies? Pop quiz. Let's see who's been paying attention. YouTube chat, Zoom chat. I want to know, what are the basket of risk currencies that we look at, that we label as risk currencies? What is the basket of the safe haven currencies? USD, GBP, no. Timbuktu close. GBP is not a safe haven. Holy shit, you guys are dumb. Dixie and Jen? What's Jen? Tesla. Tesla could be a safe haven nowadays. All right, anyways, pop quiz over. Safe havens: US dollar, Japanese yen, Swiss franc. All right, US dollar because it's the world's reserve business currency. That's why it's the petrodollar. Japanese yen due to their debt structure buildup. Swiss franc due to the amount of offshore banking done with Swiss banking. Swiss franc, Japanese yen, US dollar are the safe haven currencies. Your risk currencies are AUD, NZD, CAD, GBP, Euro. All right? Understand? So with the market optimism, we're seeing more liquidity and buy positions entering the stock market and entering our risk currencies, and liquidity coming out of the safe havens. Yeah, gold is a safe haven precious metal, but I was just asking about the basket of currencies. Gold is obviously a safe haven precious metal, but I was asking about safe haven currencies and risk currencies. All right. Okay, we still have central bank support active. That's why markets are so optimistic alongside the flood of vaccine headlines. So usually we start off analysis with gold, but because we have some economic data with GJ, we're going to be starting off with GJ just because we have that economic data in 20 minutes. So let's start off the board here. We're just starting off here on the hour time frame. Okay? Obviously, we don't have to zoom out to the weekly, to the daily. You guys can come to the YouTube page to see my exact perspective on GJ higher time frame and GBP USD higher time frame. For anybody who followed this GBP USD analysis 2 days ago, you could have caught 150 pips. Anybody watch this and follow that? And same thing I said about AUD USD in there. It was a 100 pip play. GBP USD was like 150 pips once it broke structure. But yeah, so we're not going to go all the way out to the higher time frames. All we need to identify is bullish market structure, bullish trend. What else we need to identify is we've only had GJ do two things. Either push up into new highs and have buyers print new highs, and then have a pullback phase as they take profit, which usually pushes price down to a previous high or a 50% correction point in demand area, and then a support created, buyers jump in from that demand, you go back to revisit that high and continue up. Or you push into a new high, consolidate and create an order block and liquidity zone, and then break out into a newer high. So when you're looking at the structure of GBPJPY, even when you've had some more aggressive pullbacks, you have to understand the market timing. This pullback came from a new high and was at the end of February, start of March. This pullback was at the end of a month. This pullback was at the end of a quarter. When you are looking at these pullbacks that come from new highs that are being printed, it's a higher probability that if we don't break structure, that was just profit taking happening by buyers. What you want to identify during these pullback phases is lower time frame bearish market structure to play for that time being. And as long as you don't break below previous low points, that bullish market structure is still very much intact. And as soon as you break above that corrective pullback bearish structure and prices push down to a more favorable demanded price point for buyers to jump back in the market, you run right back up to previous highs as an initial target and potentially new highs. So as long as markets stay optimistic and Japanese yen fades out its strength, because when we look at the Japanese yen and the US dollar, which we understand are our safe haven currencies, right? Look at our safe haven indicators. So the Japanese yen, even though it's had a bit of this aggressive upside move, it's coming from a new low printed, and we're still respecting bearish market structure. US dollar on the intraday time frame stand alone, when you're looking at the dollar index, still very bearish, right? Even when I like to take a peek at the volatility index, which is your fear and greed indicator of North American stock markets, it essentially tells you the inverse information of the S&P 500 index. North American stock traders and stock traders overall use this as a fear or greed index. Okay? So meaning, whenever there's a massive amount of short selling on the stock market, when stocks are only supposed to go up, this shows that there's fear, there's fundamental fear in the markets, and inversely, the volatility index spikes up. That's why when you first zoom out here, and you go to when the coronavirus happened, you have the inverse of the US stock market. When the US stock market crashed, VIX exploded to new highs. And then as the market started to correct and you had the central bank support, VIX does the opposite, right? I don't primarily trade the VIX. I just like to use it for the information it tells me about the fear or greed sentiment coming within the US stock markets at least, and just tells me about investor behavior in the US markets. So when I see the US dollar still bearish and weak, when I see the Japanese yen, even though it had this upside bounce, it's coming from a new low, it's still bearish. When the volatility index is bearish, and then when you see global stock markets just continuously booming across all regions, you know that the central bank support is still active across all countries and regions. You know that investors are still heavily confident in the central bank support and the recovery to come from vaccines. That's why stock markets keep printing highs. So when you're looking at our currency pairs, there's a higher probability if the UK economic data is good, that we should start to scale in and continue buys to these previous highs. Right? As long as markets remain optimistic, the stock markets are bullish. Specifically, when you're looking at GBP pairs, you can look at just the UK stock index just to give you confirms. Now, there's not a direct correlation between the US, or sorry, let me rephrase that. There's not a direct correlation between the UK stock market and GBP, the currency. But when you see the UK stock market very bullish, it tells you that investors are very confident in the markets and corporations and different industries within the UK. So this leads to a higher confidence and increase in value potentially in the British pound as well, alongside other confirms. Do you understand what I'm saying? You use these types of micro and macro fundamental confirms that tells you about the real world economies and markets alongside your technical confirms to paint a beautiful picture and increase your confidence. Right? So even though we've had these pullbacks on GJ, they've always come from a new high that's been printed, and we just identify that as profit taking by buyers. We have these minor corrective phases that can last anywhere from a couple of hours to an entire week period. But once you break out of that corrective phase and you don't break previous lows and you're still maintaining the overall structure, all you have is those profit taking by buyers. Sellers jump in and take those buyers and allow them to exit out of the market, and price come down to a more favorable demanded price. Demanded price. Get it? Demand zone. A demand zone technically that we observe technically is just a more favorable demanded price by the market makers, institutions, whales, whatever you want to call it. Usually technically this demand zone lines up with a previous low or previous high price sensitivity area. That's how technical demand zones are labeled out, with supply zones being previous highs as target points and potentially new highs based on historical price points. But do you understand the transaction between buyers and sellers that creates that technical structure? All right. So now when we zoom in on GJ, what I want to identify is the same idea. This was a new high that was printed. We didn't break previous lows and created a support and order block, which you can better identify from these highs and lows. You had this corrective pullback structure, which had sellers pushing price down to a more favorable demand area as buyers took profit from these new highs printed. A technical double bottom, which shows us sellers exhaustion, and as you break out of that corrective bear structure, you start targeting previous highs. So now we had the same idea. We had this corrective bearish market structure until we fail to break previous lows or even test these previous lows. Create this consolidation in liquidity zone, which we validate as buyer side liquidity due to the higher time frame structure being bullish and the macro fundamental optimism. Now, like you guys already know from the previous streams, we've been calling high risk, high reward buys from these lows for that reason. Remember that? Who's been watching the last London streams that we've done, where we've been calling high risk, high reward buys from these lows and then potentially scaling out as you break out of the structure in the previous rejection points? Safer buys were being this point, of course. And then this was the high risk areas, right? So now, when you're looking at the seller's exhaustion from the lows and starting to exit out positions and the repeat of market structure and the potential trend, we're at this stage, in my opinion here, where we're coming to push to a previous price sensitivity area. We are in this stage here, where we're coming to push into this area here of price sensitivity. What would be ideal, in my opinion, as we start to zoom in on the structure, is we can see we're very bullish in structure. We've had these impulsive buyers moves. We don't have any reason to sell GJ. What I'm looking for on the lower time frame, as we start to dissect the 1 minute price action, is a break above 151.5 right now and continued buy scalps to the upside, or we let London open and get a pullback to 151.2 and continued buys. Even if GJ breaks below 151.2 and does a pullback to retest bullish structure, I'm still in a buyer's bias. All right. When we're looking at the price action here on the 1 minute time frame, we can see very strong, solid bullish market structure starting to develop. I don't see any signs of exhaustion here. That's gonna show me reason for a pullback unless we were to break below 151.2 and then continue up. Here, I'm pretty much looking for a pullback and continuation up, or even very shortly, as we watch this data release in 2 minutes, a potential quick lower wick formed and continuation up. All right, so does the GJ analysis make sense? Because we're going to zoom in now, and in 2 minutes here, we have the economic data that's going to be coming out for the claim out job change and the average earnings index. We're going to watch that here. All right. So we have a new hourly. This hourly candle is closing. It's closing nice and bullish above 151.500, which is ideal here. That psychological price level, which is following the quarter point theory. We like to look at GJ on our lower time frame price action dissection. If the UK economic data is also solid in this next minute here, pretty much, we'll look for this 2 a.m. Eastern German market open candle to create a lower wick. Even if it comes down to here, then flips back bullish, and start to look for buys on GJ. Buy scalps on GJ. After we see this economic data, after we see the reaction GJ has to the economic data, if it's good, poor, or neutral, then we're gonna let it set up. Then we're going to let it set up for actual London session for those same trade ideas I just told you guys, okay? And then we're going to go through our analysis on gold, Euro USD, USD CAD, GBP USD, and US 30. No, don't worry about GJ yet. We're going to watch this economic data release in 20 seconds. And then if we do get the price action confirms here, we can start to look for entries at 0.500, where I'll call out the better price action signals, and we still need to clear above these 1 minute highs to get safer buyers momentum and continuation to the upside. But that's also going to be dependent on this data coming out in 1 second here. So it looks like 56,000 fewer people were payrolled employment compared to 2021. You guys can read it to the left here as well. It didn't send the unemployment rate data yet. $56,000 fewer people were in payrolled employment when compared to 2021. Still waiting for the release here. Let's just zoom out quickly on the hourly candle. What's significant to see is that we still did have a solid bullish candle close. And if we still remain above these bodies, it's looking pretty solid. To take us up to UK jobless rate is down. So the UK jobless rate is improved. It's looking good. I'm just waiting for the unemployment, the claim out job change. So unemployment's improved. We have less unemployed people. I just want this hourly candle to first give us a little bit of a better lower wick, because it doesn't have much of a lower wick now, or support at 151.5 here, and then start to take some buy scalps. but it's looking pretty good so far. The data's solid. To continue these buy scalps, you have to have 1 minute candle closures above here as well. When we start dissecting the price action, once we have bullish candle closures above here, then you're going to get an impulsive push to the upside. See how we didn't clear these 1 minute highs just yet? So let's just wait, because I'm still waiting for that unemployment data. But if you're in at 151.5, then you're still good. But you have to clear above these 1 minute highs and have candle closures above here. And then you're going to see another impulsive move to the upside. But I like this break above we had. I like the retest at 151.5 right now. And the data's good so far. But the price action confirms aren't the UK unemployment minus 50%. It's pretty mixed. Where is it? UK Office for National Stats says the latest figures suggest that the jobs market has been broadly stable. So it's fairly neutral so far. I think we're going to get a deeper wick here because we didn't clear these 1 minute highs just yet. But yeah, not the biggest impact from the data. Fairly mixed neutral data so far. But let's zoom in and look at the price action better here. Now, what I don't want to see is bearish candles close below here for anybody who's looking for the scalp. That's going to tell me there's a higher probability of getting a deeper lower wick. Right now, if this candle closes weaker bearish, it's still good if the following candle pushes up and goes bullish, and then we clear above and have candle closures above these 1 minute highs and start to have an upside move like that. If we have another bearish candle push down to 151.5 and close below, we're going to be patient and wait for better price action confirms for executing buy scalps on GJ, okay? So I'm just watching the reaction here, because then otherwise this is what I mean. If we come below 151.5, you're going to have a higher potential of a deeper pullback. And right now it was just mixed economic data. We also have Bank of Japan's financial stability support, which is going to impact Japanese yen short term. So now, when we're looking at this candle, if it closes as is, it's still good as we're above 151.5. And this is what I'm talking about. We want some bullish candle closures, the continuation. Once we clear above these 1 minute highs and have bullish candle closures above there, it's a lot easier to extend that scalp trade. But what you want after this bullish candle is a stronger engulfing candle and then breaking above these 1 minute highs. So what's good so far is that we're holding above our area of interest, and we're still haven't broken below yet, and that economic data was just fairly mixed. It didn't have much of an impact. So I just want to see some stronger buyers momentum by seeing more engulfing candles and breaking above 151.56 1 minute highs right here. So if this candle can push up and close bullish and match these highs, and the following continues up, it looks a lot better. If it closed very weak bodied bullish, then there's higher probability that buyers are starting to exhaust here when we're looking at the pressure. And the significance of this 1 minute high is not just the current price point, but also where we rejected here to the left. So this is good how we're staying above 151.5. This is an area we're going to mark out just on the 1 minute price action. If this, see what I mean here? We need this candle to close bullish, and we need candle closures above here to show us a continuation of buyers momentum. But keep in mind, it's only 2:05 a.m. Eastern. We still have an hour until actual London open, so we can just be patient and wait for that cleaner setup. But that's what I'm going to, as I'm breaking down gold, what you need is stronger bullish candles to break above this 1 minute high, more consecutive bullish candles, weaker bearish pullbacks just to previous price sensitivity areas, meaning like this is not good obviously with this, and this is exactly what I told you with this weak bullish candle close. But what you would need is if we fail to still break below 151.5, pushing up to here, stronger bullish candle closures weaker bearish pullbacks to these price sensitivity areas, and then you start marking out those previous candle body highs. Okay? If we have candle closures below 0.500, just stay out. If we just start to consolidate here and we still don't break below 0.500, it's still all right, but we need breaks above these 1 minute highs when we're looking at the 60-second price action. The data was just mixed. So GJ might give us a better setup with actual London volume. Now gold, let's look at gold here. So gold, let's first look at the 4-hour chart. We know that with market fear at the initial start of the pandemics, we had gold as a safe haven precious metal increase in value as its demand exploded and the supply and delivery of physical gold around the world was limited. We had a peak into new all-time highs around 2075. As global stock markets started to recover and rebound even higher than previous highs, and the central banks continued to provide that flood of support, we had those vaccine talks flood the markets as well to bring potential optimism. We had gold enter this corrective bearish market structure to pull back all the way to retest this higher time frame bullish market structure you can see here. Okay, now what we can identify is every time we have sellers print an extensive new low, we have a very aggressive bounce. With here having even higher probability of a bounce with this double bottom created at the retest of higher time frame bullish market structure and this liquidity zone to the left. Okay, so what I'm looking at is still upside room to potentially retest into the 1800s, especially if the US dollar remains weak, which is the secondary that gold is obviously traded against, and we have short-term US dollar weakness and still respect the bullish market structure on gold, we can continue to the upside there. Right? Yeah, GJ, see what I was talking about here? That's why I said we'll get better price action confirms and to stay out of GJ, because this wasn't looking like the best price action. So that's why I said we'll get probably cleaner confirms for London. Just be patient. As soon as the price action wasn't looking clean, that's why I advised just to patiently wait for the better setup, and then we'll call that out when the time comes. All right. Same idea though, when you're looking at the GJ price action, you would still need to break above 151.5 even to look for entries, and then clear and have 1 minute candle closures above these highs to signify more buyers momentum and order flow entering the market to start taking us up to 0.800 target area next PPL. And what you want to look for as per the price action with the minute candles is like a sequence like this. Stronger consecutive bullish candles, just weaker bearish pullbacks or minor little zones up from PPL to PPL, right? Obviously you can see compared to this or compared to these types of price action from the low to the high, you didn't see that same type of momentum so far here. Maybe with the possible new 30-minute candle, it'd be a lot cleaner, but those same price action confirms you guys need to see there. Just pay attention to that as I'm breaking down gold here. But anyways, now when we look at gold, also when you're looking at the intraday market structure, you can see that we had sellers in control for an extended period of time until we had this double bottom at that 1680 liquidity zone to the left, retesting higher time frame bullish structure and noticing sellers exhaustion and exiting positions with what we observed as a technical double bottom. Once we broke above this liquidity zone, we started to create some more refined bullish market structure now. So on gold, either if we break below this current price sensitivity area, we could get a deeper pullback to like 1755, 1760 in continued buys, or we're seeing a potential support being formed now for potential buys and continued buys to the upside. We know that the US dollar is still holding that weakness, and gold is just in this little bit of a corrective pullback structure like we identify on any pair. where we're still having highs printed by buyers, just that profit taking that creates this pullback. Those support zones, once you break out of that corrective structure, you run back to the previous highs and new highs, right? So we're starting to see that exhaustion here. If we can break above 1772.5 and the dollar's still weak with all these liquidity rejection wicks and break above the lower time frame structure, we can start to scale in buys. Otherwise, if we don't break above 1772, I can see deeper pullbacks down, like something similar to this, and then having better buys at around 1759, 1764. I would only be looking for gold sells below 1759 with a break of the bullish structure and stronger US dollar strength. Also, watch GJ as it's back above 0.500. But does that make sense for gold? Buyers have printed a new intraday high. We had a pullback phase with profit taking that happened by the buyers on the intraday time frames. Even though it was aggressive, it didn't break the previous high or price sensitivity area. We're starting to see an intraday support being formed just a bit below the key level with a mix of bullish and bearish candles showing us exhaustion by sellers and sellers starting to exit orders, which would signify more buyers entering the market, and buyers momentum would be a break above 0.500. 1772.500, and then a continuation to the upside with looking at scaling points above the key levels to the left. Or if we don't break above 1772, then a deeper pullback to 1759 and continued buys. Would the market structure still function without fundamentals? Would investor behavioral data along with sector positioning be enough? Investor behavioral data and sector positioning is fundamentals. God damn. That is the fundamental data, economics, investor behavior that shapes the technical charts that you read and do analysis on. Get it? The fundamentals to it. There's a good question, but hello, darkness, my old friend. No, I'm just kidding, man. I guess I don't want to say a question's a bad question. We're all here to learn, but you know what I mean. It is the markets. See what I mean? This is not the price action confirms you want to see. Now we're starting to see too much exhaustion here. GJ's looking messy. Now the safer buys with this 1 minute exhaustion would be above 151.5, and then you're easily going to have scalps up to 151.8. And we're gonna look at it through London volume anyways. It's only 2:15 a.m. Eastern here. And at least it's back above 0.500. We need some more bullish candles. M. Shaw, fundamentals over technicals. I don't know. Do you like your hands over your feet, or do you like your feet over your hands? Which one would you rather not? Would you rather be without? Probably like both, right? God damn it, man. My goodness. I'm not looking to counter trade. I'm not looking to counter trend trade and look for GJ sells. Sorry. I don't see a double top here yet being formed. I'm looking at the intraday time frames. It still looks like very bullish price action. Just like I was telling you guys about the price action and the consecutive candle confirms you want to see on the 1 minute. Look at the hourly as well. Much stronger bullish candles, engulfing bullish candles, just minor bearish pullbacks or liquidity zones. Once we hold lower time frame price action and validate that momentum above 0.500, then if you want to counter trend trade, maybe if we reject here, you could get a pullback sell. But again, these are counter trend trades to the current higher time frame bullish market structure. Some traders have preferences from different videos you've seen. That's okay, yeah. I just asked you a very logical question. What do you prefer, your hands or your feet? It's the same thing you asked me. That's how I see the question you asked me. You asked me, what do I prefer, fundamentals or technicals? And I asked you a question back. What do you prefer, your hands or your feet? So that should answer your question, right? Exactly. Yeah, not the best price action confirms just yet. Yeah, maybe some of you guys like to walk on your hands and feet. Some of you hyenas. Yeah, so when we're looking at gold, that's what I'd be looking for. A break out of this corrective structure, coming above the key level, and continuing back to the highs as at least initial targets, potentially extending into new highs. All right, we're starting to see this hourly candle potentially starting to break above 1772.52. I don't want to jinx it, but it's starting to push up to there as well. All right. If we stay below 1772, I'm not looking for gold sells. If it does its pullback to retest bullish structure and give us a deeper pullback, it's still maintaining bullish market structure, and I'm still primarily waiting for the buys. What is your opinion on the notion that technical analysis never works and is virtually useless? Oh. You know what, guys? I think I'm going to call it a night here. Yeah. Yeah, that's it for tonight. Yeah. You know what? I think I'm done for the night. I've been trying my best with the YouTube audience. I've been trying to keep patience, develop my discipline, and just share financial market information, and just share information about fundamentals, news headlines, technicals. There's like 50 webinars on my YouTube page, thousands of news headlines on the Twitter. It's just, you know what? This is ridiculous. It's just like these questions, like I'm trying to be interactive with the chat, answer some questions, but the questions are just, I never have any thought-provoking questions. Nobody ever teaches me anything. I'm always teaching everybody else everything and getting headaches. At least the private chat, the aristocrats, they've gone through the educational webinars. They pay for my time and value. And with that payment, they get a shit ton more of information. But as my YouTube's been demonetized, as I'm getting less views, less likes, nobody's sharing my content. You know what I mean? And then still, I gotta come here. I come here dissecting. I come here dissecting fundamentals and technicals for a year. Just on YouTube. Scalping webinars, part 1, 4-part series, 1 hour, 50 minutes. Psychology webinars, evolution of a trader, Dow Jones, central banking corruption, crude oil information and fundamental analysis, fundamental principles in market climate, gold trading, greatest transfer of wealth, a fucking historical timeline of GJ fundamentally and technically. I just want to give everybody perspective here. These are 20 minutes long, 40 minutes long, 3 hours long. GBP CAD, Dow Jones, GBP USD, Euro JPY, Dow Jones, UCAD, Scalping Part 3, GCAD, Psychology webinar about normalizing losses in trading and the probabilities. The next US recession, called like fucking, you know what I mean? And the actual US recession, that was called 10 months ago here, man. Fundamental principles and shit like that. GJ buys from the lows, called here. Live trading sessions, 4 hours long, 4.5 hours. You can see how my morale has died. You want to see how my morale has died? Look at these live streams, 4.5 hours long. Then look, 3 hours, 3 hours, 50 minutes, 3 hours, 3 hours, 20 minutes. Market updates, 50 minutes, 3 hours, 3 hours, 20 minutes, 2 hours, 40 minutes. I just had enough, man. You know what, guys? Here, go watch QBanks. The guy who asked the questions about, you know what? Fuck it. I'm going to subscribe to him too. I'm going to turn post notifications on. Yeah, fuck it. Why not? Why am I doing all this? You know what? Let's just watch QBanks. Let's just watch a day in the life of QBanks. Let's just see what he's up to, shall we, instead? This got 70 fucking thousand views. Let's watch this instead. Yeah, sure. No problem. Here, take this like. Just take it. I gotta keep fucking posting educational webinars, sharing real value, and getting just retardation. You know? Let's see what this is about. What do you got going on here? Oh, yeah. Oh, your Tesla? Oh, sick.
How you doing? How are you?
Let's see what we learned.
Let me call you back in like about 5 minutes, alright? Like 20 minutes, actually.
Yeah.
Oh,
I had
nice.
to call Nick. Cool, but like,
Oh.
can you like explain to me what you guys do? Because I asked, and then you got
okay.
the
What do you do,
about the
Q-Banks?
goat, and then like you never answered, and then like we just kept on going, and I'm like, I need to know what I'm gonna be doing.
So I feel like it's like a super freelance type life that.
Oh, so it's a freelance life you
Everything
live.
is like,
In the
it's like this freelance, like
You?
Yeah, right.
Right?
Kinda.
Call it freelance.
I think it's called freelance.
I wish I could freelance
yeah?
like that.
I think it's called freelance.
Fuck this fucking. What is it? Any Forex videos here? Oh, let's see. Your 170K Forex trade breakdown.
Hey guys, and welcome back to my YouTube channel. I'm Quillen Black at QBanks on Instagram. On this video, I'm going to be talking about my big day that I had yesterday trading inside of markets. I was trading US 30 and actually cashed out.
Oh, 126,000 views. All right, cool. You made 170K.
I'm going to be going over the full breakdown once I get on the charts, so you guys can kind of like maintain sanity value from. So hold on tight and let's head to the chart. First things first. Right?
Oh, so you're just gonna show us a chart after the fact. Nice.
You cannot bring up risk management if you don't know the account balance or the person's skill. Risk management is based on risk management is going to be. Hey guys, really like portion compared to what I was trying to actually make off of the entire trade. But as you can see, like whenever you trade in the market, I mean it goes up and down.
Okay, cool. Wait, say that again.
Entire trade, but as you can see, like whenever you trade in the market, I mean it goes up and down.
Wait, what was that?
Make off of the entire trade, but as you can see, like whenever you trade in the market, I mean it goes up and down.
Oh, the market goes up and down. Okay, cool.
It fluctuates, you know what I'm saying?
It fluctuates.
It's a wave, so you have to be okay with that. It's never like you have one TP and then you pretty much just have that one trade in all the way to the TP, you know what I'm saying? But this trade, I was actually up like 30,000 at one point, and then went negative, and then back to positive again. So I went positive 50,000, negative 10,000, positive 30,000, negative 88,000.
Oh, fuck!
Like, so it
Negative.
fluctuated, but at the same time,
fuck, it's awesome information, bro.
Maintained for the projection like how I had. So the entire time that I was trading this entire thing, I was inside this zone. This entire zone all right here, right? So throughout that entire zone, you know, I had my major level of support that was still being maintained the entire time period,
nice.
like right here. So let me just focus on this entire area based off of
GJ price action. Go fuck yourself. What are you guys talking about?
All right. So throughout this entire point,
we're watching the real YouTube content now. What are you guys talking about? What
that's
GJ?
When I had
GJ.
My
profit. Okay, that was your take profit.
50K.
50K,
right?
You were up there. Oh, sick.
Some people will say, "Oh shit, I would have closed out this and that." But at the same time, I had a bigger projection in mind. You know what I'm saying?
Okay.
When I was around here, is when I hit like the max negative. So
so this is the up downs.
Plus, you look back on the profit post and whatnot before, but I seen it. I'm not sure, but at the same time, the max that I was willing to lose on this entire trade was a certain amount.
Let's look at this guy. This guy, 101,000 subs. Let's see this guy making 5K in 1 week on a small account. Yeah.
Oh, I didn't see you there. What if this?
Remember, like Warren Buffett, like Ray Dalio, like all these financial market traders. These guys are financial market traders.
Actually just collapsed and I just ate shit. Look how thick this goddamn tree is though. Holy shit. I'm that later. So first thing I want to talk about, guys, huge. The free Telegram is literally back open. Already sending out trades, already sending out charts, all kinds of different shit, video breakdowns, all that good shit. It's on my free Telegram again. If you guys want to join the free Telegram, it's 100% free. All I do is teach daily, weekly. I'm on there all the time. Go down below in the description, join the free Telegram. Like I said, it's 100% free. You're gonna learn a lot, and it's the only way you're actually going to be entered into a giveaway or 2 giveaways that I have coming up. Okay, talk about that in about 2.
First, let me join your free Telegram. Free Telegram. Join. I don't want to put in my fucking information. I gotta sign up to your website to join your Telegram. It's not free. What's free about this?
seconds actually. Let's just show that real quick. Your boy upgraded, got me a new monitor, which means I still got this old monitor right here. This motherfucker right here, bro, is huge, bro. Here's what we're giving away, man. All you have to do to be interested in this monitor giveaway, man, let me tell you, this is it. This is all you can pretty much all you have to do with and then hella knowledge for free.
I can't, bro. You didn't even let me fucking join your free Telegram. I'm not putting in my information.
You wouldn't anyways. I'm gonna
Telegram should be one link. Just go to Telegram right here. Telegram, join, view Telegram, join it. You're trying to scam me into signing up on your website.
One person that ship out, but I love. Man, these are great monitors. We have one chance at that. Do those 3 things. Other than that,
the video's only 12 minutes long.
I hope you guys enjoy the video. See, and way to a restaurant right now. Super solid trading week. 100%. Pretty much very little.
This is supposed to be a breakdown Forex strategy. What is this?
Losses in a gold trade right now as we speak. Have that on the screen right now. Kind of just waiting for that to take place. In a gold trade right now as we speak.
Fam, this man's full margin. This man's got a 6K account with a 6 lot on gold. Full margin. Whatever.
Have that for tomorrow too much.
You know what?
But yeah.
You know what, bro? Fucking great work. Let me add another like to your fucking.
Just want to go over kind of the trades I took and pretty much where this account started, where it's at now. Hopefully we can close this gold trade within the next few hours, but we'll restaurant. That's it.
Okay, let's see. Oh, okay, cool. We gotta see this fucking. We gotta see the fucking Lamborghini. Nice. All right. What the fuck is this? Man?
Actually, guys, while we're out, we will be there.
This man's eating lunch. Where the fuck is the trade breakdown?
Just be happy with what I have here. I'm just gonna be grateful with what I have. Putting the account at, we'll see right now. He's out. But
this man had no stop loss.
Alright guys, as you guys can see, live account still. Here's the trades we took in this week. Currently
said, I'm just happy for what happened here. Just opened it up. Said, I'm just happy for what happened here.
100, but I don't have here. I'm just gonna be $4 made. Count at 26 more. It was not showing $500 and $7,500. Gonna look like, oh, there we're $2,500. We're gonna go trade. Let's go. Go trade. Show you what I saw. Talk about. Hey man, want to go over that gold? Here's pretty much the gold trade. One thing I do.
So kind of garbage 1-to-1
trade that smaller 2000.
This man took a 1-to-1 gold trade. You guys see this? With that 6 lot he FMG'd, he was willing to lose as much as he was willing to win. This is a 1-to-1 risk versus reward. This is like a 50 pip stop loss for a 50 pip win here. It might even be, you know what I mean? This is 1-to-1. RR. What the fuck is this? It's a 1-to-1 RR
account
trade.
This week. Here's pretty much the gold trade. One thing I do actually want to show you guys before we get into the breakdown. I want to show you guys that I did send this trade out to my VIP. They got this trade. We took our take profit. One got hit. We were 50 pips running. And
this man got 2,300 people in his VIP chat taking these 1-to-1 risk versus reward trades. That's not medium risk. That's extremely high risk trade.
Take profit 2 end up, you can see, for 100 catching these 5,000 free groups trading. I told them, you know,
this is awesome. Oh, look, another 1-to-1 trade. Another fucking 1-to-1 trade here. This is awesome, eh? You know what? This is just fantastic. Fuck me, right? I'll go fuck myself over here. Oh, I'm starving, man. I'm out here doing all this. Watch any of these and tell me if I waste your time. You know what I mean? This is ridiculous out here. One-to-one trade is terrible risk management. You must be a fucking retard. With a 1-to-1 risk versus a reward ratio, you need a 90% win rate to be profitable in the markets. You need to win 9 out of 10 trades. Otherwise, for every trade you win and go up a step, the next trade you lose, if you're using equal lots, you're just going up and down. You're walking in the same spot. You're risking $10 to make $10. So you have to have consistent win rate. God damn, you guys don't know much about probabilities and math, eh? Trading is a game of probabilities and math. All right, anyways, let's get back to the charts here, shall we? Let's get back to the charts. Gold obviously didn't break above 1772.5. It's still respecting this corrective pullback structure. I'm going to see if we can get that deeper pullback down for better risk versus reward buys, or again, if we flip above 1772.5. GJ is not clearing above these 1 minute highs yet, where I was telling you guys for the safer buy scalps. We're seeing a lot of rejection and exhaustion, potential for a deeper pullback in this area. Does everybody understand the gold and GJ analysis? And I'm going to go to I'm going to go to GBPUSD now. If you guys followed the GBP USD higher time frame analysis 2 days ago, you would have already caught. If you're risking 1 to 2% on a 1-to-1 money risk management, if you're consistently risking the same percent using the same loss, that just doesn't make any sense. With a 50% winning ratio, 50 to 60% winning ratio, you need a 1 to 3 risk versus reward. Even Rakeel strategy is not even a 1-to-1. Rakeel closes a shit ton of trades at break even or like a minimal loss by actively trade managing. You know what I mean? Same thing with GBP USD. Still very bullish on the higher time frames. Respecting these previous price sensitivity areas to the left. We can see this exhaustion by sellers as we push down to this favorable demand area after having this pullback structure from this high printed. We're breaking out of this bearish structure and the previous lows, where if you followed the higher time frame webinar, this was the buy play we called. Now for scalp ideas, we're still looking for US dollar weakness and GBP strength for potential scalps to start targeting these previous high points as for higher time frame targets. But when we're looking at price action, I'm only looking for buys above 1.4. You can see this was the previous high point here to the left. And we had this impulsive buy play of about 140 pips. So even if we get a pullback of about 80 to 70 pips here to give us a 50% correction, I'm either looking for a pullback to this previous high point and better risk versus reward buys there, or a break above 1.4 and continued buys above 1.4. I'm not going to be touching GJ if it GU, if it rejects 1.4 and just starts to consolidate and range at these highs. I'm only looking for buys with a retest of 1.392 or a break above 1.4. Jeev, I'm starting to question your credibility. If you only risk a very minimal amount, 1 to 2%, how in the world is that bad if you're winning 60% of the time while achieving a 1-to-1? It's just fucking math, you retard. Go search up any manual institutional bank traders from the 70s, 80s, 90s, and onward. Okay? They had a win rate of 52%. Do you know why they were profitable? Because their wins were 5 times, 10 times larger than their losses. Right? A 1-to-1 risk versus reward ratio is not consistent enough with the win rate percentage needed for manual traders to profit long term. The higher the risk versus reward, the better for you. If you can risk $10 to make $40 or $50, it's a better opportunity for you as a trader than risking $10 to make $10. You need to have a positive risk versus reward ratio, a 1-to-2, a 1-to-3. The higher, the better. But also the higher the risk versus reward ratio, the harder it is to achieve that as well, and the more patience required for that. Having an equal risk versus reward ratio means you need a higher win rate consistently to be profitable long term. It's like running in the same spot. If your account has $1,000 balance, and let's say you use a 1 lot, and you risk 10 pips to make 10 pips, and you lose your first trade and lose $100. Now you need to win back double the pips to come back to break even and come back above into profit. It's fighting a losing battle trying to take and compound an account or grow wealth taking 1-to-1 trades. Someone said if you lose, just use a higher lot size after. God fucking damn. You see it here first, folks. You can't make this shit up. Oh, the claim out job change? Sorry. That's showing the claim out job change is good data. It's showing that there's less unemployment figures. Even 1 to 1.5 is still good. You see it there, folks. I can't make this shit up, you know? GU, now we're gonna have to have 1 minute price action above 1.4 to start taking entries above here. But we're gonna need to break above these 1 minute highs to extend buy scalps. Alright? GJ's looking better if we can have it break above. Yeah, double or nothing. GJ, if we have 1 minute candle closures above here, it's gonna start to fly down. It's gonna have some strong pushes now. We still failed to break below 0.500, created that support. If we get bullish candle closures above here, this isn't the strongest candle close right now. I don't want the bearish candle to close back in the range. If you have a bearish candle close back in the range, below these lows, then just stay out. You want smaller bearish candles now and larger bullish candles breaking above these 1 minute highs. When you're looking at this 1 minute candle here on the new 30-minute candle that could potentially push up, same idea. It's good that we broke above and are holding above our 0.500 PPL. It's good that we're having consecutive bullish candles. We do not want this candle to engulf this body and close back in the range. If it does, the next candle has to close bullish and go higher. Otherwise, another bearish candle just means we're going to have a consolidation zone here, all right? And we're going to wait till the actual London Open. See what I mean here? So if this closes weak like this and the next candle pushes bullish and then closes above these bodies, we should start making our way to the upside. It's a new 5 minute candle, but the price action is still looking good. Let me zoom in more here. Now that we're seeing our areas of interest, we want stronger bullish candle closures. I want to start breaking above these bodies and wicks now, having more bullish candle closures. I do not want any bearish candle closures back in this range. I don't give a shit about your weekly resistance you mapped out. This is looking good. Now, remember, let me delete this quick because it's on a separate pad I use. We want this type of sequence of events that we're trying to take advantage of here now. We want stronger consecutive bullish candles. Just these minor, weaker bearish candle pullbacks or little liquidity zones, which so far we are starting to see here and it is starting to look a lot cleaner as per the price action. We just don't want any strong aggressive bearish candle closures back below these previous highs or back below 0.500. If we get some minor bearish candle closures, that's fine. But you want minor bearish candle closures, little consolidation zones, and continuations to the upside. Now we do have London open in 19 more minutes. But we want this type of sequence of events when you're looking at the price action, understand? Now I'll zoom in so I can tell you guys the price action signals. I do not like how this candle closed very weak bullish. I do not like how this candle's a very aggressive bearish pullback, but as long as we remain above here as per the candle body closures with this little pullback here, it's still good if the following candle's a weak bearish, then we get bullish candles. Now we need bullish candles above these bodies to continue back up. We don't want back below this range. So in the next 20 seconds, if this candle still closes as is above this previous high in the 1 minute price sensitivity area, the price action's still clean. But we need the next minute candle to make a quick lower wick and flip bullish. We do not want to engulf back below here. That's not showing me the cleanest price action to continue back up. Then we're going to need to wait 18 more minutes till London open. So I like how it's closing right now. I like how it closed weak there. It still didn't engulf the previous body. It wicked at these previous highs. But we need bullish candle closures to close above these bodies now to show us more buyers' momentum. Same type of sequence of events. If this candle closes bullish as is, it's solid. I don't see any crazy headlines or anything yet. We just want to be mindful of, obviously, London open. Let me zoom in more here so you guys obviously can see what we're still talking about. Very nice price action. We're looking to target 0.800. See the exact price sensitivity areas we're talking about. See the more clear momentum we're seeing now. Just minor corrective pullback candles. More aggressive bullish pushes. That sequence of events. What else do you want from me? Secure some positions as we're going to slap 0.800 here. Leave your runners risk free as per scalp positions because we still have London open. I didn't mean to scare people. No Lambo. Sorry I didn't show you jumping out my Lambo. Sorry I didn't show you that. Alright? But at least we got to do something real here. Yeah. Yeah, W's in the chat. Straight to targets. Live. Recorded. Exactly what to look for ahead of time. Price action breakdowns live. About to slap 0.800. Market going up and down. Market going up and down. Alright though, but actually watch the dopamine hits. We hit our next range we're talking about. Secure some positions, leave runners risk free. Do you see the sequence of events that we just took advantage of as scalpers? Do you see the sequence of events? Alright? Look at where we're reacting. That next psychological price level and quarter point on GJ. Secure some positions and leave runners risk free as it's a new 15-minute candle and we have London open. If London open gives us a pullback to these order block highs and to these 1 minute highs, we can get potential further entries. Or you could still continue to hold your runners. Alright? Remember, as scalpers, professional scalpers in the market, manual trading scalpers, they secure at 5 pips, 10 pips, 10 points, etc., etc. Look at exactly where we're reacting to. Look at exactly where you're seeing them profit take as well. The market's taking profit at the same time we're taking profit. That's a good sign. That's a good sign. All right. So if you took the higher risk 0.500 entries, you got 25 pips. If you waited for the break above the 1 minute highs, you got 20 pips. If you jumped in later, you got 15 pips. If you jumped in very late, you got 10 pips. We can extend these trades if at London we get a pullback and we don't break structure, or if we break above 151.800. Did it make sense of what I was telling everybody about the intraday analysis, buyers and sellers transaction, how markets are fundamentally optimistic? Having that understanding of the macro and micro fundamentals alongside the economic data being better increases my confidence when I'm breaking down the price action for you. Okay? A stop loss for the scalp would have had to be below these candle body lows, about 5 pips. Even if you took that trade, you got a 1 to 3 potential trade there. This is a 1 to 3 setup. 1 to 2 setup. All right? Now, remember, what this does to you as a manual trader who has emotions involved, and what this does to me, breaking down a live trade to everybody and helping everybody make money and take a winning trade, is it gives you a hit of dopamine. It starts to make your heart race. It starts to get your panties in a bunch. You want to make more money. You want to take another trade. You don't want to stop this high. Right? So give yourself a smack on the back of the neck. Go take a quick walk. Go take some deep breaths if you need it. And emotionally neutralize yourself. Because when we emotionally neutralize ourselves, we will be able to take another potential scalp with logical, critical decision making. When we trade on a dopamine hit, or when we trade on a high, we're going to potentially have higher probability of rushing a trade or taking another impulsive trade that may result in a loss. Okay? Same thing when you take a loss. And don't I give you the best advice of when to secure some positions? Come on. Range to range, baby. What I'm looking for with how this hourly candle closes in the next 10 minutes is if we can still close bullish, is if we can get a pullback to these 1 minute highs and a continuation right back up. But as per the scalp trade, you're good. If you got 25 pips, 15 pips, 10 pips as a scalper, that's it. You're good. If we have another favorable setup with the London volume, with clean price action candles, then we'll look for execution points. But why overtrade? Why over leverage now when we can come back and attack another day? You guys just got to complete 1 minute candle by candle breakdown with analysis ahead of time of exactly what to look for and why. Why is there 350 people here and 200 likes? Gold we're not touching yet. GBPUSD we're only going to touch if it comes above 1.4. But same idea with what we need to see on GU as GJ. We can start to take these trades here with your price sensitivity areas being here. But you need to have candle closures above these 1 minute highs and start seeing that sequence of events on that 1 minute price action to take those scalps and extend the trades to the upside. All right. Yeah, the UK average earnings index was good. The claim out job change was good. It showed less unemployed people in the UK, more job creation. UK stock market still bullish. Global stock markets overall still very bullish. Volatility index bearish. US dollar bearish. Japanese yen in bearish structure. If we break above 151.8, you guys can extend your runners. If we break and retest above 151.8 or have or clean candle closures above, we're going to continue to the upside. Remember the sequence of events we're seeing. Even though you had this little bit of a pullback here on the 1 minute when you're observing the price action, when you're looking at the price action, look at the sequence of events in the candles. Stronger impulsive bullish, just minor bearish pullbacks. All right. So once we break above 0.800, you can extend your runners because your runners are still risk-free. Good. They're still safe. And then we're going to head up to 152 next target. But obviously, we have London open in 8 more minutes. Trust me, I'm not trying to be you know, self-righteous, but you guys are taking the stream and content for granted. I'm absolutely shocked how all these marketers are getting 30,000, 50,000 views, 100,000 subscribers. I can't even pull like 300 views some videos. It's fucking ridiculous out here. And I already got a good amount of people in the private chat who pay for my value and time. So I might be taking a break off YouTube for a minute just to give people a chance to soak in all this information. I think I've given out way too much information from my brain and through my trial and error that people can even absorb in. Jassel, stop asking me the same retard questions. I already gave you the answer. You don't want to go search up the math of probabilities in the markets. You want to keep being stuck on your shit trading. You want to keep being stuck in your fucking retard ways, which is the same way that 99% of retail traders trade. And you want to keep trying to push your views which don't work and trying to get justification for your trading methods. I already answered your question about probabilities and risk management. If you want an exact webinar on it, go watch this webinar on it. This is what I mean. I have full webinars on these topics about risk management, risk versus reward ratios, the psychology around losses and winning and trading. You have a 45-minute webinar just on that topic. Welcome to... You have me talking about normalizing losses in trading, different trading styles, risk management, how to create better realistic market expectations. You know what I mean? So this is what I mean. This is why I'm taking a break off YouTube. This is why Monty took a break. This is why Seed took a break. And Seed and Monty don't even put out as much content as me. They just stream every night. They're not actually constantly sharing consistent information like this shit either, you know? So that's why I'm taking a break off YouTube for a bit. I'm already making money trading myself. I'm not even trading this week. I made 25K US dollars the last week and a half, which I showed you guys like 10, 15 times now. I got capital hungry. I got my ventures outside of trading. I'm taking a break off YouTube, man. It's not worth it with the amount of views so far and with how my account is demonetized and how the YouTube chat is just fucking toxic. The YouTube community itself is just toxic in the sense of what they support and don't support. I don't care about comments, troll, chirps, roasting, and hate, but it's so toxic in compared to what they view and what they support versus what they don't support, you know? So I'm going to give you guys a chance and opportunity over the next month or two as I'm going to ghost off YouTube to go watch all those videos and learn as much as you can. No, I'm trying to get you guys to go watch all these videos and actually learn. Because half the people who ask questions have not watched all these. You guys have not watched all these videos. Let's Tetris, you have not watched all these videos. You have not. You guys have not watched these videos, taken notes, studied them. 100% not. So that's what I'm trying to give you guys the opportunity to do. You guys are going to get the opportunity to see what you're missing and see what you took for granted and get the opportunity to watch all these videos. if I was pushing capital hungry private chat subscriptions, I wouldn't be closing the private chat when it hits 400 members max. You know what I mean? Private chat's already at 350 members. Every time it hits 400 active members, I close the private channel. You know what I mean? Just because with the private channel, once you have too many members in a group with only one person running it, it becomes way too unproductive, way too messy, way too many people's personalities clashing and shit. So, it's not like I'm trying to push memberships, because even if Capital Hungry was to gain like more members, I'd close the signups anyways. So we don't ruin the community within Capital Hungry and the productivity within Capital Hungry. Trust me. Very nice analysis made. Played out very nicely. Great job. God damn. This is beautiful right here. Holy. See? See what happens when you come to the private chat? You see what happens? You already be mapping this shit out ahead. You already be mapping out what I'm already breaking down live, but on your own time. Great job. Great job. Solid, solid. Yeah, if you guys want to send me any charts and stuff like that, feel free. Jeez, good shit, good shit. Did you already secure some as well? Are these some runners? You secured some, right? Oh, these are your running positions. Perfect, perfect. Let's just wait for London Open now. It's in 2 more minutes. Let's just go back and review the hourly price action, because it's looking very beautiful. This is as nice as you can get for like an hourly candle close. I think the hourly is honestly just gonna make a quick little lower wick and then push right back up. If we could get a deeper pullback to 151.5 again, it would be good, but I don't even think so. Can I ask a retard question? Yes, because you asked that you can ask a retard question. So I respect that, Nate. I respect that you knew this was going to be a retard question and you asked anyways and you came to the table with that. So I can respect that honesty. Why do I use fundamentals and scalping? We do not only scalp. We intraday trade and also take higher time frame analysis. For example, GBP buys, when you come here, this is swing trade ideas that are active right now for over 150 pips. When we're doing these live stream sessions, it's using price action, micro fundamentals, market structure, and technicals to look for active entry points. We secure partial positions as scalps to remove exposure and risk out of the market and protect ourselves. Capital protection is our #1 rule in the market, survival. London Open right now has no upper wick and it's pushing down. It's gonna make a wick right here and flip bullish and fly, it looks like. But anyways, when we secure partial positions at 10, 15, 20 pips, 1, you're profiting. 2, you're taking risk and exposure out of the market. And 3, you're removing stress and emotional attachment out of the market as well. Then we look to extend running positions into intraday trades and potentially swing trades, while also looking to scale in positions for intraday trades and swing trades if the fundamentals line up. When we're looking at fundamentals from a macro perspective, it tells us a lot about investor behavior and money movement through the entire markets, right? And when you're looking at micro fundamentals, such as, for example, how we've been observing the dollar movement, Japanese yen movement, VIX movement, it tells us a lot about how money is moving through the sessions, right? So it looked like London, like I was telling you guys, pushed down first to create its lower wick. Doesn't have an upper wick yet, it just created it. If we have bullish candle closures above these bodies, we are just going to continue bullish here. Same type of sequence of events we're talking about with the candle price action. We're seeing consecutive bullish impulsive pushes, minor little corrective pullbacks that don't break structure so far. Now we're going to be watching 151.8. We're going to be watching these previous highs, and we're going to be watching 151.5. All right. If we close bearish below 151.8 on 1 minute, you're going to have deeper pullbacks. GU also now. We're above 1.4, but we still didn't clear these 1 minute highs just yet. So if you have entries at 1.4, it's still valid as long as we remain above here. But what we want to see is bullish candles closing above these 1 minute highs, US dollar weakness, and then we'll have continuation in scalp buys to take to the upside after validating this little consolidation as buyer side liquidity and buyer order flow. We still have optimistic markets regarding overall investor behavior. We had stronger GBP data. It's just that we have a bit of indecision when we're looking at the US dollar movement standalone. Let me go to the 30-minute chart here because the US dollar printed a new low. So we can see we're just getting a bounce from these new lows in the US dollar. I just want to see the dollar make its upper wick and flip back bearish and clear these lows. When you see the dollar stand alone technically have that continued bearish price action and pressure, this gives us more confirms for GBP USD buys, Euro USD buys, potential gold buys with those confirms we need, and UCAD sells below 1.25. I usually like to secure at 20 pips, 15 to 20 pips, and then leave runners after that. But it all is very objective to when you're watching real-time price action. You know what I mean? When you're watching your real-time price action here, you didn't really have any reason to close for initial positions until we hit our first range. Do you see what I was telling you guys about London market open with the momentum we're seeing? How we pushed down to create that lower wick and instantly started pushing up. So now your running positions got an extra 10 pips of profit just with that volume. I'm looking to target 152. See how we're seeing stronger bullish candles, weaker bearish candles. We're not seeing any bearish engulfing candles or anything just yet. That's what we want to see, that sequence of events. We want to remain above these price sensitivity areas now. We want to see weaker bearish candles, even if we come down to 0.800 again. Obviously, what I don't want to see is aggressive engulfing bearish candles, especially if you had one singular 1 minute candle close all the way back in the range. That's showing me buyers exiting positions and higher potential of a deeper pullback. But just getting some bearish candle closures or some deeper pullbacks here, I'm not too worried still with the sequence of events we're looking at in the price action. Now, I'm watching this 1 minute candle potentially react to these candle-bodied lows. See how it just made that little lower wick? You need bullish candle closures now above these bodies to have validation of more momentum to extend to 152. As soon as you get a bullish candle closure above these current 1 minute bodies, watch, you're gonna see that push. Otherwise, if you don't get that, there's higher probability of a pullback and then buyers jumping in on the lower time frame there. So I'm looking right for these. As soon as you get bullish candle closures above these bodies, then you're gonna get another impulsive push. That wasn't clean enough yet. It closed pretty much right in line with it. So you can see how we didn't break above it yet. We're getting that deeper pullback. But if we have weaker bearish candles, it's still all good when you're observing the minute by minute price action as you're looking to extend your scalp trades. You just need to have bullish candle bodies above here, and then it shows a lot more momentum on the lower time frame. If anybody took that 0.800 London Open trade like I described, there's 10-15 pips quick as well. I like how we had a nice bullish candle closure above. I don't want to have a bearish candle engulf this. I want to have this candle either close as is in this minor bearish side or just continue bullish. Gold, we don't have any clean setups yet. GU isn't clean enough. It didn't break those 1 minute highs just yet. GJ has been the cleanest price action. That's why we've been focusing on it. UCAD still respecting below 1.25. So this candle, if it closes bearish as is, it's still all good. It's still a very weak bearish candle close. It didn't engulf it yet in the next 3, 2, 1. We just need to have continuous bullish momentum candles. And then to tap 152 as our next target point in range there, next psychological price level. We're about just about 5 pips below it here. And yeah, fucking close enough. All right. So there you go. If you want scalps, you got either almost 50 fucking pips if you took 0.500, 40 pips if you took the order block high. If you even got a late entry, you got 36 pips on your runner. If you took the scalp from London Open there, you got 18 to 20 pips. Full candle by candle breakdown. We're reacting pretty much to the next range and psychological price level. GU wasn't giving us clean confirms yet. Gold didn't give us clean confirms or anything. That's why we focused on GJ. I didn't say there was I said if we have stronger bearish candles, we'll get a pullback. Otherwise, we're looking at the sequence of... look at Summer Vibes G. Everybody roast the fuck out of Summer Vibes G right now. Everybody roast Summer Vibes G right now. I just gave a full 50 pip candle by candle breakdown. Anywhere from 50 pips to the high, 15 pips at the low, step by step. And that's what your ugly, retard, fat, man-titty ass says in the YouTube chat. As you're sweating with your fucking stinky ass armpits and your Fruit of Looms stained yellow from your disgusting body, that's what you come to comment. It looks like you were a GJ fucking seller. Alright? We don't got time for you fucking bums. No, I didn't take any trades. I made 25K the last week and a half, so I'm good. Why is this guy so mad? Because I deal with a bunch of retards every day in my life. And my day-to-day life, and then when I come onto YouTube. It's a very low IQ world nowadays, if you haven't realized. Half you guys don't even know what fucking interest rates are. So let's be realistic here about why I'm angry. Half you guys are trading financial markets. You don't even know what a central bank is. You know what I mean? That's why I'm angry. I'm not angry. I'm frustrated. I'm frustrated that I'm trying to educate the world and educate the community. And nobody understands the value that you're being given. No, not much is going on as per the headlines. Key fundamental points still active. Investors still optimistic. Continued focus on vaccine rollouts. GJ ran smooth as butter. GJ ran as smooth as butter. Exactly what we're talking about here. Right from the start of the webinar. Everybody roast Adamar Aru. Old googly-eyed motherfucker with the fucked up hairline. Receding ass hairline. How about you stop whining in the chat? He's next. Adamar Aru. I don't know how to pronounce your name. I don't want to know how to pronounce it. He's next to catch the roast. Hairline looking like a parabola. Looking like Daniel Savage's twin. Anyways, remember I was telling you guys at the start of the stream when we're looking at target points as we're starting to scale above high risk entries, medium risk entries. And look where we're reacting now. We still want to target these highs. No, I'm taking a YouTube break. 100% I'm taking a YouTube break. You guys can all go fuck yourself. You guys can all go dislike this stream, unsubscribe, and fuck yourself. Right now, you guys can do all of that. I'll watch the subscribers and likes and dislikes drop and dislikes increase. And I'll tell you guys to suck my dick again. No word of a lie. I don't care about my language. I don't care what you guys think about my mentality. I don't care what you guys think about everything I'm saying here. I don't need to work on anything. I don't need to work on no ego. I'm 1000% self-aware. 100% aware of my weaknesses, strengths, functionality, to the point that I can guide you guys making money live on the internet and tell you to go fuck yourself at the same time. And you guys aren't going to go fuck off. You're still going to stay here. That's how confident I am. You know what I mean? The amount of work and information I put into the markets, I can confidently share information with you guys on the internet live for free and walk you through step by step, minute by minute, helping you make money. And then afterwards, tell you guys to fuck off and dislike the stream. You know what I mean? So yeah, that's masculinity exerted to its fullest. And that type of masculinity, it can really scare feminine boys like the trolls in the chat. You guys can feel it. It radiates off me. It's like I'm a Saiyan. And you guys are still regular humans. I'm out here with Conqueror's Hockey like it's One Piece. And you guys are just some random fishermen. No, but actually... That was a great trades though, eh? Can't get much cleaner than that for GJ. So let's just stay out of it for now. Gold we're not touching, it's just ranging. Euro USD we're not touching. I don't feel like doing analysis on these other pairs either. I'm not going to do analysis on these other pairs for you guys either. I'll do it for the private chat. UCAD if it can finally break these lows. You guys take those UCAD sells, private chat? Anybody take those? Look at the price action on UCAD. Oh man. Right at the key level sells 16, 17 pips. Good job, bro. Good job. Yeah, that's very nice. Very nice. A lot of people don't like my language. A lot of people don't like how I speak, but whatever. At the end of the day, I'm sharing more valuable information than mentors you're paying, any other marketer or service or person on YouTube. So, and I can stand by that. Probably only 2 people took it out of the 300. That's not even 1%. Who took GJBYs in the chat following me step by step? Put a W in the chat if you took GJBYs. To shut up that bald motherfucker and to shut up Summer Vibes G. Spam it in the chat. Just so Summer Vibes G feels even worse about his fat gut, about his disgusting body, about his weak mentality, empty bank account. Make him feel like shit. Make him feel like shit. Let's make him feel like holy shit. 160 W's here. Yeah. Thank you guys. Alright, let's relax. Yeah, better not feeling these summer vibes now, eh, buddy? Fucking loser. GJ had a great reaction at the next PPL, eh? You guys want to see what I look like? I have some pictures on... I have some pictures on my Twitter. I used to have pictures on my IG, but my IG got deleted when I had like 20,000 followers. My Twitter is very inspirational. I'm trying to help out everybody, motivate everybody. You know, you got some meal prep pictures. Eat healthy, everybody. Work out. Oh man. Ugh. That's easily a 500 pip range. That's 500 pips from low to high. When you're going from support to resistance, that's 500 pips right there. No pullback yet. Maybe a quick pullback and we'll go to like up to there. Alright? That's about it, I think. Everything else is just trying to motivate people to eat better and work out and trade better. New higher high being printed. See, I just post motivation, fitness, news, motivational music. My fucking look at this bullish trend. Boom and then boom to the moon. You know what I mean? So you could talk shit, but you wouldn't bring your girl around me, so that's for sure. I exert too much testosterone out of my pores. Yeah, make sure you guys follow this YouTube chat. Make sure you guys follow the Twitter. The Twitter posts headlines. This is just the media. This Twitter actually posts a lot of useful headlines throughout the day and night. Sorry, I'm taken. I already got a girlfriend. Bro, you talk a lot of shit about others. That's very unnecessary. Fam, go cry me a river. Like, what's like what's that gonna do for you? Like, cry me a river. Once the river is full and ready, tell me when it's done. I'll come take a fat piss in it. Yeah, you're trying to trade the financial markets. You're trying to trade the most corrupt, greedy, evil motherfucking markets in the world, rooted at the dollar, and you're telling me to be nice? Holy shit. You guys are crazy, man. I just made you guys money live in real time. Like, what the fuck you mean? That's nice as fuck. I just put money in your pockets. That's as nice as you can get in our modern world. Making people money, that's nice. That's kindness. That's exerting kindness. Man, I used to get in a lot of fights in the club. Guys would always want to fight me. People would ask Raja, even ask Ryan, because he hears all the stories in a chat with Raja. People always try to fight me at clubs and shit. And I'd just be sitting there vibing, smiling away. Just smiling. They just hate it. You just hate it. I just be there smiling, popping bottles, blazered up, and they just fucking hate it. I don't know why. Happens a lot. No, I'm going to be cutting the stream short in the next 20-30 minutes. I've already walked you guys step by step exactly through a 50 pip GJ analysis and breakdown. Gold's not ready. GU's not ready. UCAD's running nice and clean. Euro USD we're not going to touch. US 30 we're not going to touch either because it's just at the previous, it's just at new all-time highs. There's no point to overtrade or over leverage. The market is always here. Nanad 500 asked me Jeev kicked me 1,000,000 times. I don't know who the fuck that guy is. This guy just said I kicked him 1,000,000. I don't know who that guy is. Listen, I only keep 350 to 400 members in the private chat at a time. Look at the member count right now. I've said this in multiple webinars, multiple times, over and over and over and over and over again. All right? You guys, anybody in the YouTube chat can confirm that. That means when I have 350 members in the private chat, that's what I like to cap it off at. Then I actively trade. I have ventures outside of trading. And I have Capital Hungry, the service itself, where we run. Capital Hungry even has a new crypto newsroom for them. Capital Hungry has the financial newsroom and the crypto newsroom. Because we're going to start doing more crypto stuff, investments, day trading, long term. You know what I mean? Yeah, so I don't even let too many members come into Capital Hungry private chat. You guys can join this free analysis chat here. For people who are saying like, oh, like why don't you fucking do this? Why don't you do that? How come you didn't trade today? How come you didn't fucking trade today? Listen, man. Listen. It's fine. I'm good. Right? You guys gotta worry about yourselves. I'm all right. I've been trying to educate the world on the markets, fundamentals, technicals, on society, psychology, real world taxes, central banks, corruption, politics, political corruption. So I don't know what else. I don't know what more people want. I'm just getting fed up. So that's about it. I can stream whenever I want. I can come to YouTube back and forth whenever I want. That's up to me. If I want to take a month off YouTube and come back again a month later, that's up to me. Oh, great job, bro. You know what I mean? I can do, it's my stream. This is my platform, so. Sorry, I was just reading some messages I got and the headlines, making sure there's no news that's impacting the markets in some crazy fashion. But we're looking pretty good. What's this? All right, what time is it? 3:26 a.m. Eastern. I'm gonna be actually calling the stream and end to the stream over the next maybe 30 minutes. Oh man, people are joining from the fucking oh whatever, bro. It's all good. I'm ending this. I'm ending it anyways. It's not like it's any different. Fuck, bro. You really typed in that whole fucking URL? That's dedication, man. You can stay in the Zoom chat for now. Or the fucking meeting code. Yeah, you get an A+ for effort. It's just the Zoom chat. It's not like you came into yeah. You guys are hilarious. Thank you for coming in and telling me about the security vulnerability. I actually appreciate that. You're a kind hacker. The empty glass contest we completed. There's a winner for that. Yeah, there's not much else. We did our analysis. Okay, listen. Let's go through it all. Let's go through from start of the stream to the end. First, we went through the nitty and gritty. All the free resources information, my contact information, all of that. Right? Then we went through the trading psychology, the mental reminders. Right? Then we understood what economic events we had, and we even used the UK positive economic data in our favor for GBPJPY buys. We also went over key fundamental points as per market optimism and what's supporting that market optimism. We looked at the health of the global stock markets and the information that tells us. We looked at the structure and health of our safe haven currencies like the Japanese yen, US dollar, and the index being the volatility index, which shows us market fear and uncertainty. Then we did intraday higher time frame analysis, understanding the buyers and sellers transactions, market structure and trend alongside the market optimism on gold, GJ, Euro USD, UCAD, and GBP USD. We lined out potential price points of interest to actively execute scalps on. We did not get the confirms to execute buys on GJ here, we did not get the confirms to execute buys on gold above 1772.5 or at 1764. So we stayed out of gold. Even though we did analysis, we didn't get the confirms needed to execute. We did not get the confirms needed to execute on GU either, meaning 1 minute candle closures above these 1 minute highs. All right? We did not execute anything on US 30. Which we did get is the price action confirms, which we called in real time for the buys ahead of time at our analysis for 151.5, 151.55, and then 151.8 for the quick scalp and to extend the buys. You can rewatch this entire live stream and webinar for the analysis ahead of time and how we went through that process, called out the trade ideas ahead of time, and dissected entries, what to look for, how to extend the trades, take profit points, risk management and trade management accordingly, and even trading psychology as well. All right? There's no point after taking potentially anywhere from a 15 pip to a 50 pip trade with the London volume in that short period of time to overtrade or over leverage. We can always come back at New York. Now, I'm not going to do a stream at New York, but maybe with the private chat, but we can always come back another session or the following day and look for another favorable setup. Any questions before I sign off here and go? So it's a fairly short 2-hour stream. Any questions? If you guys want to send any charts, if you guys want to ask any questions, Now is the time for like the next 15 minutes before I go. I'm going to read the YouTube chat and questions. Remember, this YouTube live stream, imagine it like a trading pit. Go watch any videos about manual trading floors and trading pits. All right? You just have a bunch of men with testosterone raging, trying to make money, fucking swearing at, yelling at each other. And then after they make their profit, they go buy cocaine and fuck hookers and be friends again. All right? So stop taking everything so seriously and being so soft. Imagine this is our virtual trading floor when we come over here. We can shoot the shit, we can roast, we can talk shit, but at the end of the day, we are sharing valuable information regarding the markets fundamentally and technically alongside trading psychology. And we are either preventing losses or taking profitable wins. You know what I mean? So let me read the chat here and see if there's any questions. Message Fabian, message Krishy. Good job, bro. Keep it up, slow and steady. No headlines here. All right, let me check out here. Waiting for a new podcast episode. Any suggestions for a capital hungry rant? I only do it on interesting topics that'll provoke my thinking. Do I have to watch all the webinars again when I rejoin the private channel as I was working overseas? I would watch them again because we have added a lot more educational webinars to the library. From when I remember you were last in the chat, there's probably been at least 15 new educational webinars added. For GU buys, you need to follow the analysis I stated in this webinar that you can rewatch. And a break above those 1 minute highs when we're looking at the price action. Relation with Krishy Peach, that's my girlfriend. Gold analysis, please. Just rewind this webinar to the very start of it where I gave a full breakdown of what my bias is on gold, what I'm looking for on gold, the exact price points, and why. Jeev, why is gold weak while USD is bearish as well? Gold isn't really that weak. It's just having a pullback after peaking new intraday highs. We're actually having this bullish market structure still being respected here from these low points and having buyers continuously printing highs and just having profit taking from these intraday highs printed. So even like I said, if gold comes down to retest structure, it's still very bullish on the intraday time frames. Do coke and fuck hookers? Yes, yes. No, I don't do drugs. Hey Jeev, I'm gonna watch your videos from the beginning before I join your private channel. Any great videos of yours to start at? Listen, I don't know how many times I have to show this. Maybe it's overwhelming, you know? There's a playlist here too. Can't believe I like this guy's videos. You have these two public playlists. Capital Hungry Educational Webinars, 27 videos in this playlist. Euro USD fundamental analysis, even if it's older, it's going to tell you how I break down pairs and fundamentally as well. You have all the psychology, societal rants, evolution of a trader, corrupt banking, central banking system, fundamental principles, gold, greatest transfer of wealth, timeline of GJ, psychology webinar, US recession. It's all there. It's all there. GJ, we did great trade managing with GJ. We're starting to see some corrective little pullback structure here. If you're looking for further GJ buys, It's either going to be another retest of 151.5 or coming back above 151.8 and breaking this little corrective structure, taking the buys there. What should I do some podcasts on? Capital Hungry Rants. The rise of AI, people becoming zombies. People becoming zombies. The pandemic rant, modern society is mentally weak and sick, how the masses are living in blissful ignorance. Society is hypnotized, how to break out, the war, destruction of masculinity. Those are already there. The war between Ukraine and Russia, I can do a webinar on that. That's actually interesting. The whole COVID situation, pandemic rant, 1% versus 99%. 1 hour rant, 1 hour, a webinar about that right there. The bitches and cocaine wasn't meant to be taken literally. I was just talking about the environment that was happening on trading floors. Nowadays, all the trading floors are automated. But back then, those manual traders were still very profitable. Gold just did what I said. Oh, there we go. Gold's starting to break above 1772 now in that bear structure. Now, you can start to observe the price action as long as we remain above 1772 for the breakout entries, and you have to be cautious at 1776 here at these 1 minute highs. I would like a little retest, or if you didn't get the breakout entry, or an order block formed and continuation up if you already didn't catch the breakout. All right, everybody, if there's no more questions, concerns, anything else, I'm going to save this webinar and upload it. And I'll see everybody next time. Private chat. What is my day like? My day is like this. Or I try to do this. And I'm going to be adding this now. Sunday, I do a weekly flow before market open. A weekly recap, economic events, analysis. Then at 2 a.m. Eastern, the London Zoom session usually runs for 2 hours. Then at 6 a.m. Eastern, I'll usually send some chart updates or a New York market update, any news headlines, economic, political speakers, or whatever it may be. Either that or both, and then an Asian market update webinar. I'm also going to start incorporating crypto market updates on Bitcoin and Ethereum, and we also do market updates on AUD, USD, and GBPJPY. And then depending on if it's like a new month or if it's a depending if it's a new month or a new day, or sorry, new quarterly period, we do higher time frame analysis across all these main pairs, reply to any analysis, questions, emails throughout the day as needed, advertise CH on social media platforms, trying to incorporate a New York trading session, just some brainstorming ideas for CH platform. And then I already incorporate all of this day to day, working out day to day, the 6 to 9 small meals, breathing exercises, drinking more water instead of juice and shit, gym at least 4 times a week, just having that more discipline, sticking to trading rules, and shit I need to focus on as well, anger control, better sleep cycle, and how to effectively balance everything in my life. Yeah. All right, everybody. I'll see everybody later. Make sure to read the YouTube description. Make sure to follow all of the YouTube free resources. Anybody who wants to sign up for the Capital Hungry private channel, just go to capitalhungry.com and then message Krishy P on Telegram with your invoice and Vimeo ID. There's no point just gawking at the markets, trying to force another trade or trying to overtrade or over leverage or be greedy. We called out 50 pip GJ buys where you could have caught anywhere from 15 to 50 pips following the analysis. I'll see you guys next time, depending on how I feel actually. But everybody take care.